Welcome to the latest installment of ABL Advisors video series featuring thought leaders from the commercial finance industry. Today, my guest is Rosanne Doyle, Product Manager for ABL and Factoring with IDS Secured Finance, formerly William Stuckey. Thanks for being here again, Rosanne.
Thanks, Mike, for having me. I'm excited to be back.
It's great to have you back. Well, the last time we spoke, we were coming off the heels of the IFA. So we're checking in with you on a couple of things, but what's been going on since we last met, Rosanne?
Well, you're right. The last time was the IFA convention, and I think I shared with you at that time how exciting the whole event was. The crowd was pumped up, the enthusiasm was high. I think everybody was glad to be out of the COVID restrictions and mingling with each other. And that excitement seems to have really carried through. We have seen a lot of interest in products. We've seen a lot of good movement in the industry. I just saw the FCI published trends so far this year, and factoring is up about 7% globally. It's projected to go even higher. There were some rough bumps in 2020, as we all know. A couple of other things that have been mitigated since IFA was the PPP money's kind of dried up. So the market is experiencing a nice little bump. Those lenders that were able to survive that round and the banks are all seeing renewed interest in borrowing. While they're seeing 7, 8, 10% increases in volume now, we are hearing projections from some of our best clients that they're going to see 20% year over year. And that includes some of the bump from 2019 even. So there's a lot of activity going on. I think the excitement is great. This is what I'm hearing just sitting behind my desk at home. So when IDS is going to exhibit and show and participate in the SFNet in Phoenix, I hope to hear it firsthand from the attendees. I think it's going to be a strong show, and I think they'll bring the excitement that we're seeing in the market.
Well, that's tremendous feedback from the field. It's nice to hear the optimism that you're hearing out there. And now we're all going to find a way to capitalize on that as much as we can, right?
That's the plan. That's the plan.
Well, good. So I've prepared a couple of questions for our discussion today. And again, we're zeroing in a little bit on about how technology can help asset-based lenders tackle a lot of the challenges they're facing today. So I'll start in with the first question. And that really is, since you're in touch with so many people on a regular basis at both ABL and factoring, what are some of the top challenges ABL lenders are facing today? What are they facing most often today that you're hearing about?
They have a few challenges that they're working through, and some of the things that we hear as they were looking for solutions that can help them with this. Pulling together information and knowledge from multiple systems seems to be a big challenge. They've got, CRM system, a GL system, a banking system, the client's accounting systems. They have a lot of systems. They need to string that data together, understand it, trend it. They want to do that for another risk issue that we hear, which is mitigating risk. They want to make sure they're not taking any unnecessary chances. It's been a rough year. They don't want to make it worse. So they want to stay out in front of that risk. They want accessibility to that data. While they want the systems to connect to each other or share information, they want to have immediate access to that data so that they can react quickly, report quickly, assess quickly. And then the last thing that we hear from them, and we hear it in a lot of industries, they want to have high value touch. They want to eliminate low value touch, meaning they don't want to be answering phone calls to answer a question that can be available to a borrower on a web portal, or that information they have at their own hand. So they want to spend time on the phone and interacting with the clients for some high value, sell more product, get a better expansion on their loan, get better pricing, do other things than just answering simple questions. So those are about the 4 things that we're hearing, common. And the thread is data. The thread is data all the way across. Data communicating between systems, mitigating risk, available for analysis, and sharing with their borrower.
That's interesting because you really touched on a lot of different important parts of the entire process of onboarding a transaction and maintaining a relationship. So I'm going to just try to unpack that a little bit from some of the notes I just wrote down. Let's tackle some of those challenges. Maybe the first one you said about, somehow finding a way to connect the multiple systems, the disparate systems that maybe we'll call them that, Tell us more about what kinds of systems are needed to connect and how and what technology can do to solve that issue.
Sure. We see need for APIs, which is allowing systems to communicate data in real time. So providing APIs is a solution. Connectivity to borrowers' information electronically through aging imports, those kind of things. A lot of that we'll see, automatic calculation of ineligibles. But communications between banking systems, general ledger, all of it needs to be very seamless. We don't want to have any people involved in interpreting that data. We want a system to talk to system to talk to system, and we want to do it in real time so that all that information is current, decisions are made, any AI or machine learning that's done is done with the data that's gone from one system to the next. So we're seeing a lot of requests for API and communications between systems, and we're delivering on those requests. It's a very high priority for IDS to make sure that the borrower, the clients, systems can speak to each other.
So a lot of this comes down to not only customer service, but it is actually the mitigation of risk, whether it be all types of risk, including risk of fraud, I would imagine. So I guess my question would be, how can technology, connect these disparate systems to help lenders really mitigate some of that risk, whether it be underwriting risk or risk of fraud, for example?
Right. Managing the data that comes from the clients or the borrower's accounting systems, first of all, we just need to make sure we get it on a timely basis, ensuring that we have a channel open to receive the communication from the borrower saying, hey, here's my aging, here's my BBC, here's the information you need to know about my receivables. That alone, just having that information up to date and ready to process is something that will help mitigate risk. Subsequently, storing that information or making that information available to the lender in any form they need to see it, trend reports, analysis, forecasting, all of that information comes into them predicting risk in their investments, in the receivables, the inventory, the loans that they've invested in. They want to be able to see if components within the loan go out of balance, if they're forecasting a dip in sales, if they're seeing trends on day sales outstanding, all of the information that give them an indicator that it's going to underperform. They're going to take a look at it to determine whether or not it's a legitimate reason to be concerned or if it's a fraudulent reason to be concerned. Maybe the largest customer changed the buying terms, and so for that reason your day sales outstanding have changed. But on the other hand, maybe they've introduced 3 or 4 fraud accounts, and that may have had an impact. So good or bad trends, they want to understand what's going on, and the availability of that data from the key system, the lending system, fed by debtors, by banking systems, by all of the other parties to a transaction, are very valuable to assessing the risk, getting out in front of it, making sure your losses are minimal, if at all.
Yeah, and that sounds like it's really setting yourself up for a proactive approach rather than a reactionary approach, setting it up in advance so that the lender can really be on top of what might be coming down the road versus just reacting. Is that right?
That is absolutely right. And working with data from multiple sources. You want to see what they're doing in the market, not just with you, trade agencies, credit agencies, other systems. If their banking account is overdrawn every day, you need to understand what that's about. So all of those different players or pieces of the puzzle need to be able to talk to each other so you can get a whole picture of what's happening with your loan and your exposure.
Okay, great. Thank you. Now, you had mentioned something when you started the conversation, and when you were mentioning some of the key factors that is keeping people up at night, but they're concerned about. You mentioned accessing data quickly. Is there something that's preventing lenders from accessing the data currently today? And how much more quickly can they access the data? For example, if they were using, I'm assuming maybe it's a SaaS solution here. So if they're to use a SaaS solution, how much more quickly can they gather that information? And, what's preventing them from doing that today?
Well, having the information or the the elements of the data available in any way you need to configure it. So in a SaaS solution, that data is available for what we call data streaming. It allows the customers, the clients, the banks to send that data to a warehouse and reconfigure it, and explore it, report on it in any configuration they see fit. That will answer their auditors, which will answer their internal management reporting, even their client reporting. They're going to need to be able to access that data. Data streaming is one way to do it. Of course, you're going to have work screens and inquiry screens and reports that come out of the system, but they are limited. It's very possible that last month you needed to see a report with the client name and a loan balance and a collateral balance. Now, for some reporting reason, you need to see that same information with 3 additional elements. Rather than engaging for a new report, very static information, you use the data streaming to grab all of the data that you need and represent it in any form that your interested parties will want to view. So data streaming is the solution to getting all that information out of the system. And SaaS is just a perfect model for that. Perfect model.
It makes logical sense. I mean, it's an evolving system at all times, and the SaaS solution will keep it evolving at the same time as well.
Absolutely. And, as SaaS development goes, one of the benefits of SaaS is that there are enhancements that are being made and delivered to a SaaS solution at a high frequency. Every couple of weeks, every couple of months, you're going to get releases that include new components and new elements, and you don't have to invest in IT staff to bring that data to you. You get the benefit as a SaaS user of picking up that data in your data stream, something you may not have realized you needed, or a new element that someone else is watching that you're able to pick up on as well. So it's a really valuable tool to be able to have a SaaS solution that's growing every day with its features and information, and then the ability to get that information out of the system with data streaming.
Okay. So there was one other item which I'll sort of get through with you now, as well as the 4th item that you mentioned, and that was low value touch points. You mentioned that can be an issue, that companies want borrowers, the lenders, they really want to have high value touch points. What do you mean by that? Can you clarify that a little bit? And again, does a SaaS solution provide a solution for that as well?
Yes. Thanks for that question. The SaaS solution does, but primarily through things like borrowers portals, which is one of the products that we offer. Just think about the time when you do phone tag. The client calls you and says, "What is my availability?" You call them back. They're not at their desk. You don't want to leave the information with the secretary. You may take time out of your day to email the response. Maybe they don't want you to share that information by email. They consider it secure and they don't want you to, include it in a communication. If you give them the opportunity to seek the data they want through a portal that's available 24/7, 365, that is a high value for them. It removes you from this low value conversation. When you talk to them, you want to talk to them about not what is their availability, but what do they see the season bringing them? What is their business like? How is the market reacting to the latest news of, COVID restrictions or embargoes or anything that's coming up? You want to have that kind of conversation with them. That's real value to your relationship. Just regurgitating information through 2 or 3 phone calls and an email is just a real low value touch. So things like borrowers portals, access to SaaS solutions for the borrowers as well as the lenders, you want that experience to be high value for you, and it's high value for the borrower through the portal, and then remaining in the application or on the phone with real conversation that's adding to your relationship with your borrower is where you want to spend your time. So it's a really important thing to know that you want to get away from low value touch, introduce accessibility at the borrower level, and then use your touch time to be high value, to really build your relationship, cement it and build it.
It sort of plays into what I think we all know, is that the customer's gotten a lot smarter.
They have.
Is that right? And that's part of it, isn't it?
Yes, they're much smarter, and the commercial consumer is exactly the same as the individual consumer. I do not want to have to do anything other than stream Netflix. I don't want to have to turn on the television and negotiate with Spectrum or AT&T. I just want to go to Netflix. I'm getting to be a smarter consumer. For that value, that is really high value for me. I don't have to call a support provider. I can do everything online. I can do the same with banking. I pay my bills online. I don't have to write a check. So there's high value and low value interaction with any application or any service. And we want to make sure that our SaaS services and our applications are delivering exactly what we need as far as value impact to all of the users, internal and external. So that's the way. It's not really the way of the future. It's the way of the past. It's just demanding that there's no other solution available. We just will not accept an inefficient solution anymore, rightfully so. We won't as consumers, and our commercial clients they don't expect to do it either.
It makes sense, and at the end of the day, everyone wins from that perspective.
For sure, absolutely.
Everyone wins. So
Yes.
and that's what we're trying to do, trying to make the process work as efficiently as it can, and also mitigate the risks for everybody involved. So that's
Absolutely.
where we are. So Rosanne, that wraps up my questions on what I had for you today. It's a great follow-up to our last conversation. Is there anything I left out or anything else you wanted to say before we part ways here?
I don't think there's really anything to share other than I hope I'm going to see you at SFNet. Are you going to make it there?
I'm planning on being there. Yes, I am. And I hope a lot of people will make it as well. I really do.
I agree. And one of the best things about these interactions, these interviews, as well as the in-person, is really sharing our experiences. And I think it's a really important thing to do that. So we all understand the challenges we're facing, and we get to hear the kind of solutions we can offer. So that makes us excited.
Yeah, nothing like playing off each other and getting feedback. That's the key. So,
100%.
Well, Rosanne, thanks again for your time. Maybe checking in with you again in the future. You never know, but it's always a pleasure. And
Sounds great.
Stay safe, and I'll see you in about 2 months.
Sounds great. Thanks again for the opportunity to talk to you, and I'll see you soon.